basically what the Fed is saying, and they'll never say it publicly, is we don't care about the dollar's value. We're going to let the dollar print until people won't take it in. I mean, that's a really harsh statement, but that's the trend that they're indicating they're going to do.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 23rd through September 30th, 2024, while supplies last. First, we feature the 1-ounce gold Argor Heraeus Dragon Bar at just $69 over spot. Next, the 2024 1-ounce silver American Eagle is just $5.25 over spot, the lowest premium in months. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan from the Morgan Report. David, thank you so much for joining us today.
Elijah, you always put a smile on my face. It's good to be with you. Thanks.
Well, it's great to be with you too. Our viewers always enjoy the interviews we do. I did want to discuss a new high for gold, your perspective on $2,600 gold here.
Well, I'm very happy, 2,600. And of course, I think we have much more to go. No one knows the ultimate top. I mean, I got into the, financial newsletter business right at pretty much the beginning. I mean, gold was at 252 in the year 2000. We started about 99. And, if you would have said gold's going to 2,500 back then, you looked like a bit of a kook. And I actually said it would. In fact, I said the fair price for gold, not undervalued, not overvalued, but fair valued was $2,500. And I did that math. It's very, very simple. You take the amount of base money and you divide it by dollars per ounce, the amount of ounces that the Treasury purportedly has in Fort Knox. That gives you a number, and that number is 2,500. Today, Jim Rickards has done the same exact arithmetic. It's just a division problem, and it is around 27,000. So, interestingly, we've gone up tenfold in 2.5 decades, and approximately 25 years. But at the end of the great inflations, you get an acceleration, and that's where we're at. We are starting, I'm pretty certain, the last phase up, which means you get the biggest move percentage-wise in a rather short amount of time. I mean, it's actually Jeff Christian that said it the first time, that said 90% of the move comes in the last 10% of the time. I don't think Jeff has said that for 10 or 15 years, but I've said it many, many times, and it doesn't guarantee it's exactly that, but it gives people the idea, not just in the metals markets. You see an acceleration in many markets. It's the FOMO, the fear of missing out. And, oh, my goodness, I got to get into real estate. I can't buy houses. I'll buy real estate investment trusts, and on it goes. So we are now making new highs. And when you make a new high, it gives everybody confidence. So people that own gold probably won't sell because they're expecting another new high. So the float gets very tight. People don't want to sell. So if you only have new buyers, that adds to the price, which does what? Makes another new high. And so we're in that mode for gold. We're not in anything in the FOMO mode yet. But the banks are the main buyers. The East are still the main buyers. But as the dollar degrades more and more, and the bond market has more and more troubles, and perhaps interest rates come down for a while and have to go back up due to inflationary pressures, or maybe the market itself, I think you'll get that next let's say, new buying into gold that we will see. I just don't know when.
You mentioned how it may take a little bit of time here, but that really it seems like we are in the third stage of the bull market. If we look at silver as well, we've pretty much performed just as well this year in silver. Silver is right now above $30, nowhere near all-time highs like where gold is, though. Your take on silver going into the end of the year now that we have new all-time highs in gold?
Yeah, I think silver's a tougher one to analyze for anyone. That's how I see it. And silver's done well this year. It's on par, slightly ahead of gold, depending what weekly close we look at. But what I do think is that technically it's at almost a breakout point. We're pushing almost 32 today as we do the interview. I know you like to keep kind of evergreen, but that's a fact. And 33 is about the limit where we have some resistance. After that, there's very little resistance. So we could go from, say, 33 handle to 43 handle relatively quickly because, like gold, it wouldn't be making a new high. It would be making a new high over the last, 15 years or whatever it's been, but it wouldn't be making a new high from an all-time high perspective. But the point is that in both cases, there's very little resistance to the upside. Gold, there's none because it's never been this price before. With silver, there's some, but it's so little it almost doesn't exist. So that means all the people that own it at 33 have finally got there. Maybe they bought it at that, back in 2011, are holding it now. They've held this long. Why not hold longer? So again, it tightens up the market, new buying. And silver is such a small market. And you got this constant demand on silver that you don't have in gold. And that is the industrial demand just is a steady eddy, and it keeps growing year over year, and it won't go away because silver is in such need as a technological metal. And with the green energy push, there's a demand that it could ebb and flow, but really the projections are for it to just keep increasing. So I do think by the end of the year, I said in the January issue, which I'm almost obligated to do, what do I think for the prices of gold and silver this year? I said $2,500 gold. Well, we're past that. And I said $30 plus silver, And really, when I wrote that, been beaten up so many times in this market and leaning toward the conservative side. I mean, when you look at where silver started, a $30 call was a big call. I mean, that was, almost extreme. But now to revamp it here in September, I think that we'll be above 33. We'll be at 40. I don't know. I'll call 35. I think we could get a 35 handle. We'll be there for 1 day, 1 week, for 1 month. To push up to 40, I don't know. Once we get above 33, what I do know is it will accelerate. Maybe not the next week or two, or maybe it won't even be a month, maybe 2 months. And, people will get on your comments and say, that Morgan, he doesn't know what he's talking about. We're 3 months or 2 months past 33 and we're, trading between 30 and 33. What the heck was he talking about? But once it gets going and establishes above 33, and it won't take long, it'll go. I don't think it'd take a couple months. I think it will really move. And then we're going to have to find out where the market clears. The stale longs that bought it at 30 and now it's at 40. Oh, I'm done with silver. I bought too much. I don't like it. I'm getting my money back. I want to do this with my money, whatever. So there will be some of that. But once that clears, then we could really accelerate, especially depending on what goes on geopolitically, politically, and in the financial markets.
I did want to get into that, what is happening geopolitically here. But first, if we can touch just a bit more on gold. I know Bank of America put out a projection of $3,000 gold. It seems like gold is really making the mainstream headlines now in some respect. And in these projections for gold, $3,000 it's becoming more mainstream now. Your perspective on the shift we've been seeing in the narrative.
I'm so glad you brought that up. I mean, I do have, a lot of age, but with age comes some, hopefully, wisdom and at least experience. And this is what I saw in the 70s to the 1980 top was near the acceleration phase. You started to see it become more mainstream. You started to see, channels talking gold or talking to mining executives and stuff like that, where it was really just kind of not even on the radar for a long, long time, even though the market was moving up and up and up. And I'm witness that again. I think the clearest one that was kind of an aha moment for me was when Costco started selling gold. I said, we are absolutely, definitely 100% in my opinion, strong, studied opinion, the final phase of a major bull market. When you have an outfit like Costco that sells gold to the public, because this builds awareness. I mean, most people don't even think about gold. And it's funny because people have never invested or people that maybe save their money or keep it in T-bills or whatever. And then they say, well, how do you buy gold? Like buying gold is so difficult. No, gold and silver are the easiest purchases you can make. You don't have to open a brokerage account. You don't have to do a background investigation. You don't have to give them a photo ID. You walk in with cash, or you send a check or wire to Miles Franklin or whomever, and you buy it. And most people don't know that. They don't know how easy it is to buy real money. But that I'm glad you asked the question. So that to me is a very positive indicator that everyone can look at and say, oh, yeah, Costco is selling gold. Oh, yeah, Bank of America is talking about $3,000 gold. And this is what pushes the market higher, because you need new buyers in any market. And you only have such a base has conviction that's going to save in gold or stack silver, and that's great. And that market grows slightly. But the real new market is what you want, where people wake up and say, you know what, I have a 401k, but I don't have any gold in my portfolio. And I know from Mr. Morgan and many others that everybody should have at least a 10% exposure to the metal. I'm going to do this with this, this money or my savings or whatever.
When it comes to some of the drivers of the higher gold price, obviously we're seeing a bit of easing from the Fed. They're cutting interest rates. They cut interest rates 0.5% last week. Your perspective on that, and also maybe some of the geopolitical drivers we're seeing as well that you mentioned.
Well, gold is a metal of uncertainty. I mean, it's a barometer of the overall belief system in the economy, whether it's local or state or federal or global. And gold actually does best in deflation, although most people don't even believe that. But if you read Roy Jastrom's work, The Golden Constant, he goes back to the 1300s and does it on a basket of commodities. And he proves basically that gold is best in deflation. Martin Armstrong is good at pointing out you can have an increase in the money supply and, gold does nothing. And that's what happened for 20 years, from the peak in January 21st, 1980 till it started in, the year 2000. I think it does. The money supply does affect it, in my view, but that's not the only thing that affects it. And uncertainty is really what affects it the most. And that's a big word. It covers, uncertainty about what the dollar is going to do in the future, uncertainty about what's happening in Ukraine, uncertainty about what's happening in the Middle East, uncertainty about oil supply, uncertainty about food supply, uncertainty. And that, I think, is not, I'm not trying to, duck the question. I'm actually trying to give more thinking to the public about uncertainty. People buy gold for different reasons, but usually there's a connection to, I'm not sure about my personal future. I'm not sure about my pension. I'm not sure about my government. I'm not sure about, the banks. I'm not sure the banks are going to not, all those things. So I think that's, even though it's a broad brush stroke, I think it's actually a more accurate answer than just saying, we've increased the money supply and therefore gold's going to go high.
I think those are some very good points there. Now, when it comes to specific things happening geopolitically, I mean, it seems like there's threats to World War III right on the horizon in multiple areas in the world, where you could just have this shift, or you could have one more event happen and it triggers some sort of global conflict. Your perspective on kind of how it seems like we're balancing on a knife's edge, right? Geopolitically. And do you think that maybe is part of the reason why the metals markets are so reacting to this uncertainty?
Absolutely. I mean, going back to what Mr. Armstrong said on a podcast, recent one, was that gold and silver were pushing higher and higher. And then the war in Afghanistan broke out and it went even higher. And I think you have something similar here. And I want to back up on that question. You didn't ask it directly, but, when the U.S. government basically put the sanctions on Russia and said, look, your $300 billion or whatever it was in their account was basically null and void. That was, in my view, one of the worst mistakes made. I mean, you have to be neutral on money. You can't take other people's money like that. And that was a wake-up call to the world that we can't trust the United States. What are they going to do with our dollars? Are they going to sterilize them or not? And so that was a big impetus for everybody outside of the U.S. that, has their own currency to say, wait a minute, what if they don't like what we're doing? What are they going to do to us? So big mistake. And so what do? Well, you go to the universal money that's accepted everywhere. I mean, as Gata has said many times, and I piggyback backed on it is, when you're a jet fighter pilot and you got a survival kit, they give you a gold coin. They don't give you a Federal Reserve note. If you have to bail out, that coin will spend anywhere you bail out of, South America, North America, Europe, Eastern Europe, whatever. So coming back, yes, it's definitely a big factor. And above and beyond that, who's buying it? Well, of course, it's the East. It's China and Russia, that are buying it, more or less hand over fist, and the central banks. I mean, I think everyone that's knowledgeable about real money and economic history, monetary history, knows we're getting near what Rafi Faber calls the end game. And the end game can end several ways, but generally it's a currency crisis where the currencies aren't accepted. And if you don't accept a dollar as final payment, what will you accept? The answer is gold. Of course, the bankers know this. They know this. And so what are they going to do? And the answer is, I don't know. I suspect they're going to try to make a new system with a digital currency and probably try it to be unbacked. And if that doesn't work, then they'll tie it to gold, because gold will work, or at least the psychology of gold should or would work. It has in the past. So that's a likely scenario. So I might have over-talked it, Elijah, but it's an indicator, again, a barometer of the future is more and more uncertain, not more and more stable. It's more and more unstable. There's more and more problems. There's more and more discontent, and there's more and more reason to get something solid, tangible that you could trust, because more and more things are becoming untrustworthy, including, local governments or state, federal governments. I mean, it's a geopolitical question. I'll just drone on a bit more. Most of the inhabitants of the planet are unhappy with their governments. It's obvious this tyrannical, authoritarian, you can only do and say what I tell you can do and say, is pretty pervasive. And this is upsetting to the people at large.
We see, for example, on one side, gold reacting to all of this, right? We're seeing all-time highs in gold. But on the other side, we're seeing the mainstream media saying how great the economy is, and we're seeing the stock market at all-time highs. So what do you make of that seeming contradiction in different signals we're getting?
To me, it's a little scary because in a capital market like we have, where you have a reserve currency and you have a debt and credit market, it all plays together. And it's all based on trust or confidence. And the confidence being that the dollar will always be worth something no matter what. And if that confidence is lost, then you could go into a inflationary or even a hyperinflationary mode. And right now, we're kind of on the edge of that, whether that confidence will continue or not. And this is the basis of the whole system. So I'm not sure, what the right answer is. It's a really tough one, whether we lose our ability to continue to print money. And at times you could print money and print wealth. I've always said you can't print your way out of this, but we can for a very long time. But I think we're getting to the end of the game, the end of the road. The can can't go any further. And that place is a psychological event. It's not a mathematical event. It is mathematically impossible to pay it off, but that hasn't caused disruptions in the market where we get limit up in gold for a week, or a non-delivery of gold, or a non-delivery of silver, or something that would be so apparent to a casual observer that something's drastically wrong. They had to shut down the exchanges because a gold delivery wasn't made, or something along those lines. And I'm not projecting that is going to happen, but it's possible.
It seems like on another angle, though, we did get consumer confidence out, and it has plummeted. It's the largest decline we've seen in 3 years. So it seems like a lot of people are not buying this mainstream narrative, or looking at the stock market and are not too confident about the economy.
Well, I think coming back to the stock market, it's a weighted index. And so all you have to do is manipulate, 5, 6, 7 stocks. You can do that in a lot of leveraged ways. So you can, make your dollar work harder by leveraging it. And you can move the indexes around. I mean, this is what's taken place for a long time. And so, as you just stated so clearly, what is the real perception? Just because we get the rah-rah cheerleaders on the financial channels talking about a new all-time high in the indices, does that mean the economy's good? And if the answer is no, and it's an absolute no, but yet the investor community largely believes or wants to believe or wants to pretend that those big numbers, those new highs in the indices actually mean that we're doing well. All we're doing well is playing this money game. But if the money game turns out to be, let's say, repriced, where these dollars that you've accumulated in your bank account really are not worth as much as you thought they were because of the monetary event, cancellation of debt, refusal to pay, a bank closure. I mean, these are one-offs. These are a tail end of the curve. And I know that. What I'm stating, though, is it's happened in the past. And the trend is moving that direction. And that's the reason for these cutting interest rates that worries most people that understand finance, is basically what the Fed is saying, and they'll never say it publicly, is we don't care about the dollar's value. We're going to let the dollar print until people won't take it in. I mean, that's a really harsh statement, but that's the trend that they're indicating they're going to do. Remember, we had ZIRP, the zero interest rate policy. Interest rates is a function of several things. It's supposed to be market priced. It wasn't. It was done by the government. And really, if the future value is zero, what's the value of it now? I mean, you put money into work at interest because inflation takes over. The value in the future is less than it will be today. So you want to make up for that inflationary bias built into the Keynesian system. But if you're saying it's not worth anything in the future, interest-wise, then you may as well spend it all now.
I think some very good points there. And it gets back to how fiat currency systems, right, inevitably fail. So as we look into the future here, it's important to maybe realize that it's not just the currency, right, that's based on nothing. It's also, it seems like the mainstream media, it's based on nothing as well. You have so much manipulation regarding the mainstream narrative and the economy and the economic numbers. So how do people maybe step back and really realize, what is reality and live in reality instead of living in this kind of matrix, or this as you've famously made that video about taking the red pill, right? So your perspective on that, how do people step outside of the system?
Well, I think it's, what you and your family have done, and many others in the alternative financial and, news space. And that is to let them know that they need some education. And also, just looking at reality, I mean, it's very obvious. I mean, if your payment for your car insurance goes up, your house insurance goes up, your medical insurance goes up, the grocery bill is higher and higher. The quality that you're getting, I mean, you might get a bag of chips or something and it's the same name brand, but yet the same price, but it's gone from 12 ounces to 7 ounces. Something's wrong. I mean, you don't have to be anybody special just to see the opposite. So that's the reality. And so people see that without being educated. And then once they see that, they may look for answers. What is inflation, or why is this happening, or what happens in inflation, or what happens when inflation continues for a long time, or any of those type of questions you might put in the search engine. And the system is broken, and it's been broken for a long time. But that doesn't mean, we, the people, can't make it right, or we can't, care about our own selves and our neighbors to rectify what we can control. And we can't control food prices. We can't control what our boss is going to pay us, but we can get a handle on some of our expenses, not all of them. And I think one of the biggest detriments, the way I see it, is that the credit system is pushed so hard on the newer generations. I mean, when I started, in my career job way back, there was just very little credit available to the average person. I mean, Diners Club was about it. Then it's quickly morphed into American Express, and then you had, Visa and MasterCard. But even back then, people used credit more carefully than they do now. I really want this now. I think I'll wait and save or buy it, or at least have a down payment of half or whatever. And now it's sort of, money doesn't have the let's say, the metal that it used to, meaning that people were a little more conservative with what they spent. Now it's everything. Well, here, I make this much. What's my credit rating? I want it now. I'll buy it now. It's a swipe of my phone. It's 2 clicks on my phone. I mean, a lot of kids just pay everything with their phone. They don't even bother with a plastic card. I was buying something the other day. I forget what it was. And it was in a restaurant, and the gal took my card, and she was kind of mad it wasn't a tapped card. I had to put it in the slot. But anyway, maybe I'm off point, but I do think that as things contract more and more, money becomes less and less valuable, that people do what you asked me, and that is to reevaluate what they have and what they want. And it's going to separate people to make adjustments that maybe they aren't comfortable making, but are needed for this economy to come back to reality.
And if our viewers are interested in learning more and really learning more about how to separate ourselves from the matrix, right, and live more in reality, they can go to themorganreport.com. Can you share with us a bit about that and any last thoughts you had?
Yeah, just go there. And if you're not on the free mailing list, please do so. You can see all the interviews I do in the public domain. I write occasionally. I do have some dealers I work with from time to time. And the last one, Elijah, would be to go to my documentary that's almost done filming, and that's the silversunrise.tv. It talks about what we've talked here at the end of this discussion, and that is the fear control of money and getting over that fear and control of money and understanding not only how the system works, which most of our viewers would know, but kind of putting money in perspective. And it controls a lot of people, but it doesn't have to control you. You can get a handle on your life and live a good life. Yes, money's important. It's what we need to do transactions in the modern world, but you don't need to put it in a place where it doesn't belong. And that's part of what the film is about. It's about more solutions. Talks a lot about energy and how I think some of these energy systems that have been very beneficial to mankind have been suppressed. Because let's face it, there's monopolies in this world, and really free enterprise means there should be no monopolies. If you have a better idea, you should be free to bring that idea or that product to the marketplace, and then the market itself makes a determination of whether your energy system is better than, let's say, burning oil. But unfortunately, that can be fairly well proven if you dig deep enough. So it's just another look at our place in relationship to money. That's what the documentary is about.
Fantastic. We'll put links to all of that in the description of this video. Thank you so much for your time again, David Morgan, the Silver Guru. Yeah, thank you so much for your time, and God bless.
God bless you. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 23rd through September 30th, 2024, while supplies last. First, we feature the 1-ounce gold Argor Heraeus Dragon Bar at just $69 over spot. Next, the 2024 1-ounce silver American Eagle is just $5.25 over spot, the lowest premium in months. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.